What's up, YouTube, and welcome back to my channel. It's Dennis from Simplify Investing. Today I'm bringing you a very amusing research article that came out from a CEO from GLI Research, who is a CEO and founder. His name is Gordon Johnson. He came out with a very bearish case on Tesla, and I just honestly find it amusing. If you've been following Tesla for any amount of time, you know that bearish case scenarios aren't new. I'll put a few examples on the screen. I mean, Morgan Stanley had a $10 price target back in, I think it was June of last year. Sorry, it might have been March, but $10, okay? And this guy is accounting for the stock split. So he has his price target set for 2021. So what that would mean is it would have to be trading at $435 after the stock split, but we're talking about 2021. That just doesn't add up. So if you're new here, please hit that subscribe button. I really appreciate it. Don't forget to hit the notification bell as well and smash that thumbs up. And without any further ado, let's get started. All right, so the way I want to start off this video is by bringing up a few different banks that have came out with bearish assumptions and maybe why they would come out with this bearish assumption. So I'm going to put some articles up on the screen so you can follow along, all right? So the first one that I want to talk about is Bank of America. As you can see, this is April 2020. They came out and they gave a price target of $485, and they came out with their EBITDA and all their multiples and what the probability is, et cetera, et cetera. Next, I want to talk about the one that I really found hilarious was the Morgan Stanley $10 bear case scenario. This was back in May of 2019. They said it was basically overvalued. Shares at the time were trading at about 205. So if you remember back then, this is after they missed their earnings. They definitely missed their earnings by far, and they were on the record of going a few consecutive quarters profitable. And this quarter they ended up not making money. They ended up losing money, and Wall Street just kind of like gave up on the stock. But what I want to point out is that the bear case is $10, but the bullish case is $391. So tell me how there's so much variation between two different cases, right? I think it's really just to like gain attention from Wall Street and from other analysts, and also it's because they probably have a short interest in the stock. These people are probably going to benefit in the short term if they're shorting Tesla and the stock falls because of the news. I think a lot of hedge funds and different banks use this as a way of market manipulation, and they use this to their advantage. All right, so now I want to talk about the guy who came out on Monday with the $87 price target of Tesla. Now this is post-split. Again, I want to clarify that. So right now the stock is trading about 2018, but he's referring to an $87 price target after the split. So if you're looking after the split, he's estimating by the end of 2021 a $435 price target. So I'm going to go ahead and put the article that Yahoo Finance put on their website, and I'll just read it along with you guys, okay? So the title says, Tesla bear says stock is detached from reality. It predicts an $87 price target. He goes, in a nutshell, Tesla is essentially a busted growth story. I know that sounds crazy to people looking at that stock. Of course it does, because it is crazy. Johnson has an $87 price target on the stock by the end of next year. He goes, Tesla is trading at more than double Volkswagen's market cap, yet Volkswagen sold 11 million cars last year. Tesla sold just under 370,000 cars last year, looking to sell roughly $500,000 car this year. Yes, Johnson, we do agree with you. They are selling less vehicles than other manufacturers. That's no secret. Everybody on Wall Street knows that. The difference is these car manufacturers are decreasing market share, and they're not having any growth in their companies. That's the problem. And we also believe that the margins that Tesla's going to have on their products are going to be a lot larger than just typical cars, right? ICE combustion cars, right? So I think that's something that Johnson isn't really thinking about. So he does bring up a really good point, and this has been a subject of debate for a lot of Tesla bulls and bears. He goes, he notes that without the electric vehicles company's credit revenue sales, it would have lost about $300 million in the second quarter of this year. So if you aren't aware, Tesla does sell credits to other manufacturers. So in a few states, I believe California is like probably the one that started this. Car manufacturers, if they want to sell in the state, they have to have credits for EVs. So what Tesla has, Tesla's obviously electric, and they don't need as many credits as they have, so they're able to sell them, and they receive a revenue from that. So he's saying that without those credits, Tesla's losing about $300 million in the second quarter of this year, which is a great point. And this isn't something that's going to last forever. So he does have a point on that. But let's keep going on. He goes, that's essentially taxpayer incentives that they're getting for selling credit revenues to other car companies, said Johnson. The problem is all of those car companies are now selling electric cars, and Tesla is guiding their credit revenue sales to be down 50% in the back half of this year. So what he's saying is that these other car companies that are buying these credits are going to be able to obtain their own credits because they are selling EVs, and that's going to decrease the revenue for Tesla. So it's a really, really interesting point. So he goes, their core business is loss-making, he added, which I completely disagree. Johnson points to domestic sales and U.S. gross margins, which peaked in the fourth quarter of 2018, and notes the China growth story touted by some analysts isn't that impressive. The reality is, in the month of July, they sold about 11,400 cars in China. They produced about 12,200, so they actually built inventory, and that's despite a price cut globally this year, 4 of which were in China. Well, you could say that about everyone. Of course, everyone's going to have extra inventory because of what's going on. Who in the middle of the pandemic was thinking about buying a car? I don't think many of us were thinking about buying a car unless you truly, truly needed it. Like you needed it because you didn't have a car or your car broke down in the middle of the pandemic. Yeah, sure, you might. But not many people are really thinking about going out and buying a brand new car in the middle of a pandemic. So just keep that in mind. We think reality is much different than what is pumped out there, and we think the stock price is driving analysts' opinions, which is confounding to us, versus reality. That I too kind of agree with, right? A lot of retail investors are behind this stock, and I think that's one of the reasons why it's getting pumped up so hard. Not just Wall Street is pumping this stock up, but retail investors. Everybody wants to own Tesla, and they believe in the story, and they believe in Elon Musk. And I do believe that's part of the reason why analysts are changing their perspective on the company. But that's not necessarily a bad thing. It's just something we have to live with. So he goes, the year to date, the stock is up about 385%. That is mind-boggling. So if you've been trading Tesla for a while or even holding it, you know that Tesla's been one of the most shorted stocks in the stock market. Right now it has about $20 billion in short interest, and about 8.5% of shares outstanding are being shorted. So it's really nothing new. There's been a ton of short squeezes in the past. That's part of the reason why there's some days where the stock just rallies, is when a whole bunch of shorts expire and people are buying their shares in order to cover the shorts. So I think we're going to keep seeing this. A lot of people are going to underestimate Tesla and its future, and it's nothing new. Now, another person I want to bring up, on the contrary to this bear, is the CEO of ARK Invest, Cathie Wood. She's one of the biggest Tesla bulls ever. She was saying $3,000 price target on Tesla when the stock was trading at about $600. She actually upped her bullish case, and now she's estimating a $7,000 price target, of course, before the stock split. And she's always been the one who's been rooting for Tesla. If you don't know who she is, you should look into her portfolio. She has an ETF. You could look into it if you go on the ARK Investment website, and she displays all her trades, all her different positions in her portfolio and how much she's weighed. There's been a lot of articles that come out in the past that say, oh, she's selling Tesla. And the only reason why she was selling Tesla is because she has to rebalance her portfolio. Tesla has shot up so much that if she started off with 10% of Tesla, now she might have been at 20% of Tesla just because of the ride up of Tesla. So I would really encourage you to look at that if you're being scared by this bear. I think that there's a lot more upside in Tesla, and a lot of analysts are not really understanding the full story and what Tesla's capable of. So again, if you're new here, please subscribe. I'm going to be leaving a lot more videos like this on my channel. Hit that notification bell if you're interested in getting a notification every time I upload a new video, and smash that like button. And I'll catch you guys on the next one.